Big banks kick off earnings this week, and here's exactly what you need to watch. Good day, everyone. Welcome to the video of the day. Tomorrow morning, before the market even opens, five of America's biggest banks all report earnings at one: JPMorgan, Goldman Sachs, Wells Fargo, Bank of America, and Citigroup. The single morning sets the tone for the entire earnings season, and here's exactly what you need to watch. Let's get started. So what's the setup behind it? All five banks report Tuesday, July 14 before the opening bell, and it lands on the same morning as a June CPI inflation report. That's a lot happening in one sitting. Options market are already pricing in real volatility. Goldman Sachs could swing 6%, Citigroup and Wells Fargo around 5.5%, Bank of America 4.5%, and even Standy JP Morgan is priced at 4.4% more. Wall Street is bracing for surprise, not a quiet morning. So the number one that matters more than profit is the here's the thing most headlines will get wrong. Whether this bank's beat earnings barely matter, given how conservatively banks guide, a bit is close to a given. What actually matters is the net interest margin. That's the spread between what a bank earns on loan on investments versus what it pays out on deposits. With the Fed rate path still uncertain, in trajectory is the number that tells you whether these banks can keep growing profit or whether margins are getting squeezed. The second thing to watch is the credit quality. JP Morgan's card charge of guidance sits around 3.4% of the year. Any meaningful jump above is an early warning sign for the consumer. Now, what to watch at every bank? Quick sheet for each of the banks, starting with JP Morgan. The benchmark. Watch whether they raise their full year net interest income outlook and watch credit card charge of an early read on the consumer. Second is Bank of America, the most deposit funded of the group, so it's especially sensitive to rates. They already raised full year NII growth guidance to 6 to 8% last quarter. Third is Wells Fargo, the purest bet on the lending. It lends less on the trading than the others. Goldman Sachs, the pure play on the Wall Street deal making. Watch their commentary on M&A and the IPO pipeline. Last month's giant SpaceX IPO alone drove huge fees across the sector. Last is Citigroup, expected to post the biggest profit growth of the group this quarter and the trades at one of the lowest valuations among the major banks. So why this quarter is unusual amongst everyone? One analyst described this as a genuine sweet spot for the banking. Wall Street deal making and Main Street lending both thriving at the same time. Investment banking revenue could jump around 26% and trading revenue around 14% year over year. This is not a financial advice, but if these five banks confirm steady credit and firm NIA guidance, expect the broader banking sector to rally. If provisions for the bad loans jump instead, the signal to watch closely. It tends to hit the whole sector, not just one bank. To conclude, five banks, one morning, the tone for the whole earnings season starts. Watch NIM, not the headline bit. Watch credit quality, not just the profit number. And also subscribe the channel because you get the insights like this in future. Make sure you like this video. Share it with your friends, family, colleagues too. Welcome to Money Brief. Let's grow together.